you can create wealth without ownership of real estate. Like, I know this is on your mind because we get asked all the time, how do I begin building wealth? Like really building generational wealth, even though I don't have money to put down on deals, or I don't have the right credit in order to go qualify for loans, or I don't have the ability to go sign on bank loans right now. Trust me on this. You can begin building wealth without ownership. And the word that you're going to want to know right now is control. It's all about controlling assets. You're able to utilize a technique called a lease purchase agreement. A lease purchase simply means that you and the seller are going to agree upon a price, you're going to agree upon a monthly payment, and you're going to agree upon an end date in the future in which you have to cash them out. What that agreement does, though, is that agreement gives you control over the property. But also there's one small difference between us and how we create these lease purchase agreements versus others. We are not going to be agreeing upon a specific price. We're going to be agreeing upon a specific amount of equity. That way, we are able to start building wealth into the deal. Let me talk about how powerful this is. So just to give you an example, let's say you go ahead and you purchase a property for $300,000. Let's say that the mortgage balance on the loan right now is $250,000. So you now clearly know the seller has about $50,000 in equity in this deal. That's what you're going to agree upon on or before the end date to cash them out. Meaning, if you're involved in one of our programs, specifically our QLS Home Study course, if you're involved in that and you look at our agreements, you're going to clearly see that our agreements say we're going to pay off the balance of the loan at the day of financing. So that could be 2, 3, 5, 10 years down the road, plus the seller is going to receive the $50,000. Let me dive a little bit further on how powerful this is. Because you're locking in a specific amount of equity, every time that you go ahead and you make that monthly payment for the seller, because the mortgage is still in their name, for the seller, you're now getting the benefit of that principal pay down. Just continue this example. Let's say that monthly payment on that $250,000 loan is $1,500 a month. And let's say $500 of that monthly payment is going to come off the balance of the loan. That's the principal. That means that if you hold on to that property for 12 months, $6,000 in equity has been built in. So every single year that you hold on to that property, an additional $6,000 in equity is built in for you. That is your wealth. Isn't this amazing how you can take control over an asset and start building in wealth? You do not have to gain ownership, which means that there are techniques out there that you can control assets with little to no money down, without using your own cash and without using banks, and be able to now start building generational wealth. So once you have that control of that asset, we're going to encourage you to go ahead and exit this deal and create your 3 paydays. So I'm going to go over these quickly, these 3 paydays. But before I do, I've had conversations with many successful entrepreneurs out there. Doesn't matter what industry that they're in. And they have constantly told us that the 3 payday system, that model, is what they hope to have in their business as well. Being able to get large lump sums today, being able to create consistent cash flow for long periods of time, and to be able to start looking for large sums in wealth building 1, 2, 3, 5, 10 years down the road and beyond is a model that most entrepreneurs would die for. So when we talk about our 3 payday systems, once we have control over this asset, we're now going to exit these deals with buyers or tenant buyers, buyers that need time in order to qualify for loans. These buyers now come to the table with a non-refundable deposit. That's cash now, 3 to 10% upfront of the purchase price. And of course, you bought the property for a certain price. You're going to sell it at a higher price. That's how you're going to start building in additional equity in these deals as well, because our buyers need time in order to qualify for loans. You're able to put a premium on the house. So that's payday 1, non-refundable deposit. Payday 2, cash flow. Difference between what you're collecting every single month as from your buyers and what you now have to pay to the mortgage lender or the seller, depending upon the deal. Then payday 3 is the wealth in which you are creating. The wealth is going to consist of any additional premium you create on the property, bought it for $250, sold it for $300. Also, the principal pay down. We talked about that just a minute ago, and that is Every single month, you're able to get that principal balance of that mortgage down, which goes to you. I just want to take a moment here because this has helped my family be able to start building wealth. This is an amazing stepping stone technique because once we nailed this, we then started moving into ownership because we started collecting funds from these tenant buyers, and now we're able to start funneling more money and building up this amazing investment company. So you can do the exact same thing. We've been doing it around the country with associates that we lock arms with and helping them build up their wealth, generational wealth for not only them, but for their families and many generations to come past that. So take your first step. Go to smartrealestatecoach.com/masters class. Understand these concepts because today you can start buying real estate and start creating wealth for you and your family.